Well, let's get across some of these wild movements in markets at the moment, especially in UK markets. Pete McGuire standing by at the moment to go through all the details. Pete, welcome back to the show. It's great to go and see you. Let's kick off with the UK because it is wild. It's continuing to Asian session today after some of the other moves we saw late last week. What do you make about what's going on in cable in particular? It's getting absolutely belted.
Good morning, David. Well, I'll tell you what, 118 at this time last month, and now you're at 103 or 103.50. I think it's bounced back a little bit in the last matter of 15, 20 minutes. But any market, and we're not talking about a Zimbabwe currency, we're not talking about something from southern parts of South America. We're talking about the UK, and we're conscious of it and what's happened, and it really is. It's a wake-up call, and it really shows the dire straits in not only the global situation, but really pinpointing on that Eurozone and certainly the UK.
People are talking about parity left, right and centre at the moment. That my contrarian side goes and tingles a little bit when that happens. Are we going to get to parity and potentially beyond for cable?
Yeah, I wouldn't be surprised, David. I mean, the analysts and everyone that we were talking to going back a week and a bit ago, we were always saying that 115 was the new number, then it was 112 revised down. Maybe you might see a 110. You're at 108 on Saturday morning here, and now is at 103 or 103.50. It's bounced a little bit, so yeah, why can't you see parity? These are very unusual times. I've never seen markets like this, and that's a big call. I've seen equity markets and crude just collapse, but when you see a currency come under that much firepower and sell off, it really shows the fragility. And yeah, I think there's some major problems ahead for all leading up to Christmas and certainly up to Easter.
And it's not too much of a dissimilar scenario what's going on the continent. Of course, in Italy in particular, have a new government in place. It looks like now, Meloni looks like that she's gone and taken the top job and will look to go and form a coalition at the moment. Italy's got a massive debt loading as well and running quite a sharp deficit at this point in time. Are we looking for a similar kind of scenario where the euro will continually remain pressured until there's some sort of turn of events?
Well, that's right, David. I mean, there's no doubting that. And, I put my mind back to the conversations I had with Jim Rogers going back in 2006. And, that, he was sprouting the point then, is the euro going to last after 2020? Here we are at 22. You're at 96 this morning, 0.96 against that US dollar. And we've just seen that collapse. So I'm not going to be surprised at all where the euro can end up, and certainly an aggressive right wing as far as Italy and what happens there. So we've got some major problems ahead for all of Europe, and certainly from an energy crisis standpoint and how that's all going to materialise in the next 6 weeks when it starts to get cold. First to second week of November, you need to turn your heating up, and if you haven't got the heating, we haven't seen the fun start yet. So yeah, I'm expecting big breakouts on markets and some real dynamic moves, David.
All right, let's go and stick with the FX space for the time being. I want to get your views on what the Bank of Japan got up to last week, of course, on behalf of the Ministry of Finance, intervening in the market for the first time since the late 1990s. Has an immediate impact, but I'm looking this morning, we've already seen dollar yen go and venture back above 144 briefly. We've got the Bank of Japan doing unlimited bond buys as well between 5 and 10 year tenors. Surely it's just, just preventing from what's likely going to take place given the differentials between interest rates.
Well, exactly right. And we were saying that 145 was the line in the sand that BOJ is going to really get aggressive, and they certainly demonstrated that in the last few days. So let's see where it rolls over the next matter of today's tradings at the time. If that US dollar index sitting nearly at 114, so if the yen does touch that 145, how aggressive BOJ is going to be? Is 150 going to be how they push it down even further from a trade perspective? I'm not sure how much intervention they'll be able to succeed with, the manner of technology, or well, not technology so much, but just instruments that they use. I'm really sitting here from a trading perspective going, wow, this is really quite exciting.
Do you think that we're going to go and see some more volatility in that US Treasury market as well? Because, of course, the natural progression is that, okay, well, the Japanese yen, they're looking to go and support it, so they've got to sell dollars to do that. And what were they going to sell? Well, maybe the US Treasury holdings. We saw a big abrupt move on Friday in relation to that. Do you expect to go and see a lot more volatility in that fixed income universe?
Yeah, I do, David. very much so, and I don't think the fund's started. So yeah, certainly over the next matter of weeks, it'll be, I think, game on, and it's going to be quite interesting from not only the Fed's perspective, but how governments and central banks globally try and tackle this major issue, inflation and bond selling or bond buying or whatever instruments that they want to use. For everyone's got a different agenda, and it's very dynamic at the moment.
What's the kind of event that could go and change things up at the moment? Because looking around, we're talking about intervention, we're talking about multi-decade moves in currency markets at the moment, so 4 or 5 sigma moves in rates markets. This is almost unheralded kind of like movements across these markets. When you look at some of the data events that are coming out at the moment, so I know everyone's going back to inflation at this point in time. One thing out this week is the PCE deflator in the United States. Has that got any semblance that it could go and maybe help calm things down a little bit if it is a bit softer?
Well, we're looking forward to seeing the number drop, but the reality, moving back to your first point, inflation, they haven't got it under control, David, and are they going to, and what's going to be the time frame? Equity markets are just being crashed here. We're down nearly 2% for today. So yeah, many analysts are saying that the guys I talk to, you won't be surprised to see the ASX with a 4 in front of it by Easter. So yeah, it's not looking good. Nasdaq well down from what we've seen in the last month or even 2 months. And the overall softness across markets, inflation is the main name of the game. And if the Fed's prepared to do whatever it takes to get it back to 2%, then there's a mile of hurt ahead of us. So it's, just looking and realising everything as it drops and what impact it's going to have to the markets and certainly to traders.
Quick one to finish off. I went and made the assertion on social media on Friday evening, just watching some of the moves, that we're starting to go and see the first real elements of capitulation taking place in a lot of those favoured trades at the moment. Do you agree with that? Do you think we're really starting to go and see some of those long-held views just absolutely get scuppered now?
Oh, absolutely. Yeah. Look, wipe the sleep out of your eyes. If you've seen the pound go from 118 this time last month now to 103, then that's the wake-up call that you needed. If you're seeing that inflation, Europe will probably be Eurozone edging up to 9.4%. Have a look at the energy crisis across with Russia and Ukraine, what's happening. And I heard your comments earlier as far as with David, the previous guest. I know David well, and what you mentioned about China and the situation there at house arrest with Z. We don't know whether that's actual fact or fiction at the moment, but there's a lot of big geopolitical tensions really playing out, and I think there's going to be a mile of excitement to enter the markets, and a lot of people are going to be scratching their heads going, how come I didn't see it?